Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It's January 11th. This will be our chart lesson for today. And this is Thursday, going to wrap up our week. No chart lessons on Fridays. I thought we'd take a look at the daily chart. It's kind of how we've started off these days. You can see just kind of a wild and crazy day. We traded way down here, but rallied back. They just can't sell this market off. This market's not ready to sell off. Um, It just continues to fight its way back. It doesn't matter how bearish the day looks, how bearish the week's been, whatever. Somehow they fight it back and the buying comes in and it goes higher. I read somewhere today, heard somewhere that 10%, 90% of the market is owned by the wealthiest 10% of the people in the world. And so that 10% controls everything, obviously. Uh, and, I guess they're buying that and the rest. Uh, when they buy up enough that the people come back in and keep buying, they're just not letting this thing sell off. Um, but there it is, very kind of odd looking, neutral kind of day. It's really almost bullish because of how much we fought back from that sell off. So, even though it looks kind of like a mixed kind of day, which it is, there's mixed trading there. You'll see it when we flip over, but that's pretty bullish to bring this back from being selling way down here all the way back and almost closing high on a new high for the day. We actually did trade higher. That was early on though, and we recovered most of that sell off back. So we'll flip over to the 2002 chart and we'll take a look at it and go through. There's not a lot of trades today. There really weren't. Just not a lot of setups. So there's some good movement both down and up, but a lot of sideways stuff, a lot of mixed stuff, easy to get chopped up. There's just not a lot of trades. So let's flip over there and take a look. And as you can see, we started out in this range here today. We finally broke free. And this was about when I posted the midday chart. I think we were already kind of rallying back here. And I talked about in the mid-morning chart that we'd probably come back we were coming back to test this, and that would kind of tell the tale if we were going to go lower or higher. And when it came back and tested this, what do we find? It acted instantly. As soon as we touched it, it rejected prices strongly, and they continued to sell off. So no surprise there, really. It was pretty obvious what we were doing. We were coming back to retest this breakout area, and if it would have continued higher and got back inside and tested the lows and went higher, then of course we probably would have made another move up. But instead, it found resistance there and sold off quickly. And the next thing you know, we're trending lower again. We get another trend. We get one more move down. So we had three pretty strong legs down. I'm not sure if this other one's pretty close to those other two measured ones. Yeah, it's real close. But on both of them, we went a little further than a measured move. The market was pretty bearish. But they tried to take it lower from here. And notice where this dash line is. That's a measured move based on how wide this is. And we just measure that and drag it down. And there's our target down there. And lo and behold, where do we find the lows at? Right at that target. And then it rallies from then on. Um, Not many trades here, really. After 10:30, I mean, you might as well closed up and went home. There's some green ones in here, and I'm sure there's always a few more green ones you could argue for that I usually don't put in there um, because they're just too aggressive for the average trader. And I mean, even coming down, we just didn't have much going on here. So it is what it is. But once it moves, it goes like gangbusters, and then it just goes sideways. And it doesn't really set you up to get in these big moves in most cases. Sometimes it does, but most times it doesn't. And so there's not much you can do about it except just watch it. And you can't jump in way down here, even though this thing's trending down and just keeps going. You can't jump in down there because as soon as you do, you'll get burned. And so you got to follow the rules. You got to be disciplined. But let's go through the trades and wrap this up. It's not going to take long because there's not many trades. But 7 o'clock, We had this 715 news or 730 news, a bunch of it. So I don't see anything really before that. You really should have been out by 715 or so, and you can notice it was pretty wild here. So that's why you want to be careful. Um, you don't really want to just buy this blindly. You don't know what's happening. It's still right into the news too. So, but it starts rallying, and pretty quickly you can see that it's kind of settled back down. So you can trade any of this other, but there's nothing here. Um, you get a break here and you get a second entry, but no signal bar. There is a lower high here, but you got to go short right into that support. That's never a great idea. Runs down, makes a measured move based on that first one. Notice that there's a two-legged correction there. So generally you'll get a measured move, and that's the center of the pattern, and that's exactly what that is. Of course, we go a tad further, but that's exactly what that is. That's a measured move after a move down, and then a perfect two-legged pattern, and you get that second leg down, and it's usually a measured move. And there it is. And I showed you a couple of those yesterday as well. Um, Then, of course, we bottom out. We get a first entry, then we get a second entry. And this actually breaks lower, fails, and turns up. Um, so that's a failure when it breaks above this bar. I don't like entering that type bar on an engulfing bar. So, yeah, you really need to wait for this to close. The failure happens when it breaks above that. But if this breaks bullish, and you're probably okay to go long above that too. But the way this set up, it was an engulfing bar, and then you end up with all this stem. So once this bar closes, you can't really go long. It's too risky. So if you didn't enter on the engulfing bar, which is not a great idea, then there's no trade here. So therefore, I marked it green. But that does set up on a really nice reversal. It's just a shame this didn't close more bullish. You do get another equal bar to it that's bullish. But now you got a 2-bar matching high, which is not always the greatest to go long into that. And you see it struggled there, but it ends up taking off. So you really could have entered above this bar too, because they do have matching lows. So, but again, I make it green because of the 2-bar matching high. So really, it's just that whole pattern. There's a couple of different ways you could have entered it. Maybe you enter it on the engulfing bar. Maybe you wait till this one forms and it breaks above that. But then, they're both a little aggressive and a little risky. So they're not 100%, they're not sure things. So, and that's what we want to try to take every day is sure things. Some days you don't get enough of sure things, and you have to if you want to trade, you got to take a little risk. But most of you'd be better off just not trading on those days, because when you take risk, you tend to screw it up. So we run up, we get a break. You get a little two-legged correction. No chance to really go long there again. And it runs up to a new high, makes that lower high. And this actually breaks higher and fails. I like going short on that on the engulfing bar. I'm not sure if there's enough room if you don't enter that. I mean, you could probably still go short below that bar, but you're pressing it. The better way to enter this one is when it broke higher and turned down, because that's going to trap people. That bullish bar right there with a break above it that instantly turns, that's a sure trap. When you see those, don't hesitate, take them. When you're at a point like this, a turning point, and it breaks higher one tick and instantly turns and goes out the other side, go with it. Um, it's in a situation like this. Now, tomorrow you'll see this same pattern and it won't be the same context, and you'll take it and it'll fail, and somebody will email me and say, you said this was a great way to enter. But we're not pattern traders, so make sure you understand that. It's not the pattern here. The pattern gives us a good setup, but it's the context of what happened here. We had the trend up, we got the break, we got the move to a new high, and then the little trap when we're expecting it to reverse. So you got to see all of that together, or either stay out of it. And then we're just chopping sideways. You can't enter in that stuff. It's already congested by the time you could enter here, and that looks a little like a lower high, but we already got the lower high, so this is more like a failure, and it's on the wrong side, so no entry there. Comes back to the trend line here and verifies it, but no signal bar. This is just kind of in no man's land. First entry, looks congested. I mean, it's steadily going down, but there's just no setups. And you can see here, you know, when I saw this in real time, I thought, well, you know, when it breaks below there, it's a second entry. It's only 5 ticks, very low risk bar. You know, maybe you should take that. Maybe I should just take it and not worry about it. Hadn't been many setups, and look what would happen if you took it. You got stopped out, and you had to wait a little bit, and then it takes off. It goes exactly where you thought it was going to go. That's why you can't break the rules. Even though that's very low risk, and it is a second entry, and it's right at the key entry point, you still would have got burned. So just stay away from that stuff. You don't break the rules. That's a great example. And even I considered it. I mean, I thought about it hard. And then, you know, then I remember, you know, you got to be disciplined. I'll probably watch it take off without me, but we still got this green channel working. It's not a good. This is really the signal bar because it makes the high. This is just an inside bar, and they fail a lot. And well, guess what? It fails, and it works its way across. This one's tempting as well, but it's just a first entry, and it's still congested. I don't even know if there's enough room to scalp out there. I think there is. I mean, there's barely enough room to scalp out there. I mean, that's a possibility because you do have your new high in now. But notice where it breaks out and pulls back to the key entry point, and this actually breaks higher and fails and turns down. If it breaks lower there, we're probably going to run on down and make this new low. You don't have far to go. Just make sure you got enough room to scalp out. And this turns out to be a great trade. I mean, this is one you can ride all the way down to the measured move. And once it started going lower like that, I'd look for the measured move. You get a little rally here, just a first entry, no lower high or anything. It makes a new low, and then you get a little. There's actually 2 legs up here, even though it doesn't break lower. There's a hidden second entry here. So, and this is a lower high. So I like this trade. Again, it broke higher and failed and turned down. And you could trade that on the engulfing bar, or you could wait for it to close and still go low. I did mark this one green just simply because in reality it's just a lower. It's just a first entry. But if you understand what's going on, there's a hidden second entry there. The better place to enter was on the lower high here. And again, it breaks higher and fails and turns down. Just go short right there. I wouldn't take that one on the engulfing bar just because of these other 2 little no-bodied bars here. Just to be sure it doesn't break lower and trap you and turn back up. Once it closed bearish, I think you're good there on that second entry to go short. And you can see it doesn't go very far, but you would have got your scalp. And then we're going higher again. There's a higher low right here, but it's right into the EMA, and we're really starting to look sideways. So there's nothing that tells you for sure it's going higher there. So just sit tight. This is just a first entry. Now this does look like starting to look like a strong trend, but it hasn't been going very long. So I don't think you want to start entering on these pullbacks to the trend line yet. And you can see we just chop along, run up, make a new high, and then it turns down again. So you do get your break. You also get a failed break out of here. And notice where this is. This is where we came back and retested that. So the fact that this is a second entry short, a failed breakout, a retest almost to the tick, a pretty bearish bar way away from the EMA. Maybe you enter there. The only reason I probably didn't make this one red is because you had to enter below this inside bar. You actually enter 1 tick below this. That's where the second entry occurred. And normally I'd tell you don't do that. So that's why it's not red. So I made it green because we were expecting this retest and a possible, if it held and rejected prices, you want to go with it. So again, this turns out to be a pretty good move. It runs down, it breaks out the other side and fails back and comes back up. No entry there. And then we're just chopping sideways again. But notice you do get a first, second, and then a triple test. I'd count this as one test. There's really no separation there. So 1, then you get a little separation. 2, you get some separation. Then 3, and a big bearish bar. I like going short there. And finally, you get a good trade. And moves on down pretty good. And when it goes to correct, it just starts working sideways. Unfortunately, you just can't go short into this support. There's a Nice signal bar there. There's a nice one there. I looked at this. It looks like it kind of folds over into a flatter channel. Um, it looks valid to me. It was hard to really know. I never did color it. Let me color it just so people can see it, make it a little easier to see it. I'll just make it this color. Maybe not so dark. So it does fold over there, and you get your break, and it tries a few times to make a new low, and it can't, and it just market just gives up. So, but notice what you got here. You got a new low, and you get a first entry, and then you run up, and you turn down right off that possible new key entry point to the tick. Big bearish bar on a second entry short. That's what you're waiting on. There's another second entry right here, but that looks too congested, and you can see it looked like there was a real tight channel there. I ended up widening it later, but it was a real tight congestion right there, and it just kind of continues to form there. So you can't really go short in there. This is too bullish. You finally get another bearish bar here, but it's just a first entry. It's looking real choppy, and you got that 2-bar matching low. You know, if it would have went on through, maybe you take that trade on the engulfing bar, but I don't like it right there. And of course it bounces and comes back, and then the channel just kind of expands a little bit. Again, this was tempting, but the green channel still in play. There's no lower high. It doesn't really reject down here. It's just going sideways, so no long. Finally, you get another break, and you get another second entry here. I didn't mark this one. I should have probably at least made it green, but because it is a second entry, you do have a break. It made a new high, and it had just closed higher. It does close back in the channel, but we don't know for sure that was a channel high because all we had was that line right there. You can see now it was later, but right here you can't really see that. But you still would probably be okay taking a chance on a second entry right there. It's a little aggressive. Notice we're far away from the EMA. Lower high here, but too congested, and we're just chopping around. You might argue this is a triple test, but it's right back into that resistance. So we get a new channel up, close outside, new high, and you get you break lower, and then you break higher again and turn down. I marked this one green. Again, I'm not crazy about going short way down here, and I don't like going short below and then go a bar with no body like that, because it could be congestion. You already got 2 of them there, so a lot of times you'll get burned on those. So be careful with them. But we did have a failed break out of this channel, and there's a good chance we're coming back. So maybe you risk that one. We hadn't had much to trade, so sometimes, like I said, if you really want to take a trade, you got to take what it gives you, and that's probably the best I've seen, because it's probably going to trap people. You can see it ran all the way back to the EMA, so it likely trapped people. It's just if you go short down here, I don't think you got enough room to get out. So you'd probably have to finagle an entry here and hope you had enough room to get out. So if you didn't take that on the engulfing, I just think you're better off not to take it at all. And of course, we take off up, no entry, no setups there. Then we're working sideways. You get a triple test here, but you got to go long right into the resistance. It would have worked, but you don't know that, and you can't break the rules. So once again, it's just going higher. And then finally, you get a new high, first entry, and it comes back here and it gives you a second entry. And you'll probably say, well, why'd you make that one green? It is very low risk. It's like 5 ticks, but it's not back to the key entry point, which is likely down here. Now, it's possible there's another key entry point here, and you could have seen this a different way. Maybe it looks like that right there. And if you saw that, then it is right off the key entry point. It's really an inside bar even then, though, so you may still want to just sit on that one. I would still make it green, but let's just assume that's probably the correct channel. It looks like a spiking channel after the fact. I think you get to the same place either way, but let's just go with it as a spiking channel. And as I just showed you, and I think it fits better. And you get a break here and a couple of legs up, and then it changes over. And so before I couldn't figure out where we were missing something, but I believe that to be a spiking channel. And I just my original read was a little off. It wasn't wrong necessarily. They both get you to the same place. It's just this would have helped you with this trade a little more, and I believe this to be accurate. This would have given you the break with a couple of legs up, and that might have set you up more to take that trade right there, where before we didn't have a break yet. So when I read it like that, I like taking that short right there back to the EMA. So again, the problem here is you got an inside bar that's green. So even though I said I like that trade, it doesn't really trigger right. So I still mark it green. And it turns out to be a really good move, but depending on how you read it, if you read it like I originally did or like this, I mean, still, like I said, it looks a little congested and it doesn't break lower there. So you got to be careful with it. And then this runs straight down. You get your first break. That's just a first entry, no setup. And it bounces there. And you might say, hey, there's a triple test there, but that's just a doji. And that takes us into 230. I mean, you might say, okay, there's a second entry short right here, but you got to go short right into that last swing, and there's support across there. So there's just nothing else there. It just was not. I mean, hopefully with me explaining some of them why they might be green, but you probably wouldn't want to take them. I mean, they're there, but they're not great setups. We want to take sure things that are. The sure things are good trends with two legs back with a perfect signal back to the EMA key entry point trend line or whatever with a perfect signal bar. And you'll get those, but some days you don't. And or a clear triple test with a great signal bar, no congestion. I mean, those are your sure things. And we're just not getting a lot of them. This market just feels a little odd to me. It can't sell off. It keeps going up. I mean, none of this information that came out was good. We got surprised by inflation again. Inflation was up again when they thought they had it under control. So that means they're probably not going to end up dropping rates if we get another month or another report that says inflation's still up. So they won't be able to drop interest rates. And, everybody has been expecting an interest rate drop. Now it's looking like, hey, inflation's still roaring. So it's just a lot of conflicting things out there. A lot of possibility of war all around the world. War drums are beating. This market should, if anything, should just be sideways, up and down, waiting for something good or clear to tell you what to do. But instead, they just keep taking it up. So, I mean, as long as it goes up, we're going to go with it. As day traders, we don't really care. But if you're in this thing long term, it's confusing and scary. But thank goodness as far as our day trading, what we're learning here, we don't care which way it goes. We just want it to go. We want it to give us a good setup, and that's it. As long as and usually when it's trending, that's the best. And when you get these mixed days, you can get chopped pieces in here in no time flat. So you got to be real careful, and you got to follow the rules. You can't fudge them a little bit, even though, we talked about some possibilities, but I showed you why you'll get burned sometimes too. So, if you're not 100% profitable and consistently making money, you don't want to ever take any of these green trades. You only want to take red ones. Now, if you're sim trading and you're learning, take them all. People sometimes miss that point. If you're sim trading and learning, you want to trade every day as much as you can and take every trade, and you don't care if you're right or wrong. You just take every trade, and then you study those trades at the end of the day, and you learn from them. You can't just trading alone and watching charts will not make you better. It's the trading and the experience of seeing prices print in real time with you actively engaging that chart and trying to trade it, and then going back and studying that at the end of the day and figuring out find your tendencies, figure out what you do wrong, and then correct that. Anything you did right, reinforce it, and over time you'll get a lot better. But if you just come in and trade and close up and go home, or if you just come in and watch the charts and you don't trade, you're scared to take a trade, you need to be sim trading. You need to get live trading experience every day without it draining your account. So you can't afford to do it live. Nobody can learn live. You'll go broke. I don't give a dang how big your account is. People come to me and they tell me these stories of them losing hundreds of thousands of dollars or their whole nest egg. I had $100,000 of the nest egg and I lost it all. I just cringe. I mean, it hurts me to hear people tell me those stories, and I'm thinking, what were you thinking? These are skilled. You're trading. It'd be like trying to go. It'd be like learning the piano this week and thinking you're going to get a job in the world class symphony next week playing the piano. It doesn't work like that. It takes those people years and years to get that kind of skill, and trading is no different. You can learn what we do, the basics of it, and you might learn it fast, but the experience part of it is the difference. It's the difference maker, and it's the difference between being profitable and not being profitable. And that's where you need lots of experience, and it just takes time, and people don't understand that. But I'm telling you, nobody else is probably going to tell you this, so listen to Mac when he tells you this, because I don't just make it up for a reason to make it up. I'm telling you this because you need to hear it. Don't trade live with your hard-earned trading capital. Learn on the simulator. I know it's boring and you feel like you're not learning anything, but I promise you it's the key. And even when you can go live, don't go straight to the ES. Start in the MES. No, you won't make any money there, but you'd be surprised you'll make more than you think you are if you're profitable. But start off in the MES, improve yourself. So even if because you're still going to have that learning, that psychological aspect of going from no money or play money to real money. And so that's going to affect your thinking a little bit, and you'll have to get used to that. So get used to that in the MES, and then when you're consistently making money there, then you can go to the ES, because you've kind of gotten past that money hurdle of trading with real money. It's so much of this is mental, and I didn't mean for this to be 30 minutes today because there's not many trades here. But this is a good learning experience, and sometimes I just get these things I want to talk about, and they come out, and I don't know why, and then the next day I'll get a dozen emails that somebody said they thought I was talking directly to them, and so it just happens. It works that way. When I get the urge that I should say something, I say it, and again, I didn't plan any of this. It just comes to my head, and it comes out, and I hope it helps somebody. So anyway, I'm going to wrap it up. It's going to wrap up our week. I meant to look and see. I'll send something out tomorrow. I'll let you know if Monday's a holiday. I know Monday is a holiday, but I don't know if it's a trading holiday yet or not. Usually they'll send something out on Friday. My brokers will, but usually I look or know ahead of time. But I'll look it up and we'll figure it out before tomorrow. But there's no chart listing tomorrow. And if Monday is a trading holiday, there'll be no chart listing Monday. So, and then I will be working all next week, and I leave like on a Sunday next weekend, and I'll be gone that whole next week. So I'll be here all next week, but the following week I'll be gone on vacation again. If you missed yesterday's video, I gave my kids and family, that was my Christmas present to them, is I'm taking them the whole family on a cruise, so I'm getting a chance to spend some time with my family. We're going on a cruise down in the Caribbean, so it's like a 7 or 8 day cruise. So we leave on Sunday, and I think we get back on Sunday. So I'll probably be back in the office on Monday. It might be Tuesday, though, depending on how I feel, what time we get back home, Monday or Sunday night. So, but I plan to be back in here Monday and have a regular week that following week. But so just keep that in mind. I'll be here all next week. I'll remind you again, the following week I'll be gone the whole week on vacation with my family, and so you'll have a week without me there. But anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.